welcome to our mastermind members to the Care Provider Solutions Show, Table Talk. And we really appreciate our members tuning in and giving us feedback. Some of you have probably talked to Skylar recently, our office manager. Wonderful woman, by the way. If you haven't met her, you'll want to. But she did some calls to get some feedback from y'all. And it sounded like kind of what we suspected, right? That we'd like to break these shows into smaller segments. So it's easier for you to just stop and either go through the menu and pick a topic you want to learn about, or just break it up for your schedule through the week. So that's what we'll do, but you'll still be able to watch start to finish. You'll see that listed as well. That's important for those of you who want to get your continuing education credits. If you watch start to finish, you can take a little quiz and then print out a certificate to show to your licensing agent to prove that you spent time on a topic that will benefit your mission in your AFC, which is what this is all about. So today we are speaking with Greg Scholten of On Track Accounting about something that is core to your business. Now, we all think of care providing as taking care of our residents, but if we don't have our money in order and our business in order, then we're not going to take very good care of our residents. So this is a very important discussion. We appreciate you coming to talk about it. And as always, Nadine Carlson, our head coach here at Care Providers, will lead the discussion.
Thank you. So as Jeff said, taxes can be really confusing, and if they're done wrong, even if you're an amazing caregiver, it can get you in trouble and potentially even shut the home down. So as we talk about taxes, let's understand more clearly, how do we prevent from causing these issues unintentionally? Yep. And I think one of the questions that most often comes to mind is, first of all, how do we reduce our tax burden so that we have more money to invest in payroll, improvements, and profit?
Yeah, so how you help reduce your tax burden, there's several things you can do to get there. Not only is there tax law provisions, but your county record should be in order to help you there. If we look at just the tax provisions at the moment, looking at things like what type of equipment do you have? Do you have to replace the equipment you have? Can you afford it? That can help reduce your tax burden a little bit. Can you write it all off at once? Do you take it over time? Certain things, looking at what you purchase as far as like groceries, health things for your residents, those type of items, kind of seeing those classify as write-offs. Right? If you look at meals, for an example, sometimes you want to take your residents out for a night out on the town just to enjoy a nice meal at, let's say, a fancy restaurant or something. I would consider that to be a tax write-off as serving your restaurant, your residents. Mm-hmm. However, you have to be careful that it's not like a personal meal, which would not be a write-off. So I think it's important to understand your expenses and being able to figure out how do you classify those and relate it to the business. A core feature or a core definition the IRS uses for expenses is it ordinary and necessary to run your business? And as long as you're looking at all your expenses, and by that being tracking all your expenses on a regular basis in accounting software, that's going to help you figure out if they're ordinary and necessary, which will help reduce that tax burden. Especially when it comes to year end and you meet your accountant, because we want those financials, we want those records to help get you there. And one other factor real quick on that too, by meeting your accountant too regularly and to reduce the tax burden, you might write everything off you can, but you do need to talk to your accountant because you might need to make quarterly estimates so you don't wind up with a big tax bill at the end of the year and penalties and interest. Mm-hmm. Mm-hmm. So that can also be stressful to some people as well, knowing you might have a bill. Well, if you do proper strategy like you mentioned in planning, the likelihood of having big bills is lessened.
Yeah, I like that. Yeah. Penalty and interest prevention.
Yeah, exactly.
Awesome.
Yeah.
I hear strategy. as
Yeah.
you're going through this. And if there's confusion about whether or not it is ordinary and necessary, that would be the role of you or any other accountant?
Yeah, that's where you contact myself or the accountant to say, hey, you buy groceries. The question might come in. Traditionally, if you are like me as an accounting firm, I can't write off my groceries, pretty cut and dry. But if you're not sure if you can write them off for your residents, you might want to ask the question, hey, I have to provide food for my residents. Is that ordinary and necessary? I would say yes, because you are caring for residents. And an aspect of care is you need to feed your people, right? So that's where we consider it to be ordinary and necessary.
Wonderful. That's a great answer to that question. So as we continue the discussion about taxes and how to relieve the potential of penalties and interest and just running your business well as it relates to taxes, can you tell us about the new tax laws? The big beautiful bill has some new provisions that AFC owners probably would want to know about.
Yeah, so the big beautiful bill, it does have some important provisions we definitely need to consider. I mean, as far as the owner themselves, well, let me clarify this. Let's talk owners real quick, and then we'll talk about how does it affect your employees. Because you have to, as an owner of the AFC, you have to deal with both components, right?
Yeah, right.
So if we look at just the owner component at the moment, there are provisions like depreciation, right? There's a provision that we used to have where we could write off equipment all at once, all up front, instead of taking over time. There's a couple of provisions that allowed us to do. Some had good benefits over time. Some did not have good benefits when you go and sold it, stuff like that. But they brought back one provision that was a very favorable provision that allows you to take all your equipment right off all at once, which may not have as much of an impact when you go sell it or dispose of it later on down the road. So that's a good provision they brought back. Outside of that, a lot of the other rules as far as like your tax brackets, things like that, they extended those. So back in 2017, 2018, your tax brackets were X amount, and then they changed it to another amount. Like they lowered the tax brackets. Well, those were supposed to expire at the end of 2025. So this bill actually extended those permanently, as well as gotten rid of the standard deduction. So some of those too are also some tax savings for the owners themselves to consider. Those continued lower tax rates are going to continue on as we go.
Now,
So
what
that's
about
number one.
overtime provisions? Was that something part of the bill as well?
Yeah, so looking at from the employee aspect of the bill, which as an AFC homeowner you still need to abide by and understand, there's a couple provisions there. One being the no tax on overtime and the no tax on tips. I'm assuming most of your employees do not get tips, so I'm not going to really cover that at this perspective. However, they may have that to have a second job or whatever it might be, or a spouse, right? We're not going to cover that here. The no tax on overtime. The no tax on overtime is an interesting one. Basically, it says that if your employee is going to work overtime, they don't get taxed on it. Now, it's kind of misleading in a way that you might think, oh, they work overtime. I don't need to have it taxed on your payroll. That's incorrect. As an ASC owner, you still need to run payroll like you always have. You still need to run the overtime, time and a half, all that kind of stuff as you normally would, because you still need state labor laws to comply with those. You still need Michigan tax laws to actually, Michigan just didn't know recently, last week, just passed no tax on overtime as well too. So that's different.
A new provision too.
For Michigan, they just copied the federal, which is good, with their budget bill. But you need to run all this too. When the employee goes and files their tax return, they'll get a tax credit on the overtime at that time. And they're only going to get the 0.5 as the credit itself, not the regular rate.
That's the employer that gets a tax credit or the employee?
The employee.
Gotcha.
So if you pay your employee $10 an hour, overtime is 15. All right, they work 1 hour of overtime, you would pay them 15, but on their tax return, they only get credit for $5. That's what they do. So as an employer with your payroll software, you should have a list or amount of how much overtime will be paid out to the employee when they do their taxes.
Interesting.
In 2026, it'll be on the W-2 itself, but for 25, it's not going to be on the W-2.
I see. So line iteming, regular time and overtime is absolutely critical because of this change.
Correct. In your payroll software, if you don't have payroll software, you need to get payroll software because the rules are just going to get more complex. I'm just going to plug that now. Just in general, I don't care who does it, you need to have it. But you will need to provide some type of form that says, here's the breakdown of your gross pay.
So you mentioned the importance of having payroll tax software and dividing the regular time and overtime, which also plays into workman's comp, because
Correct.
that'll reduce your premiums when you can show the difference between overtime and regular time. Can you speak to that?
Yeah, so with workman's comp, typically, this is an assurance person who can definitely go more details in general on this. I can give kind of an overview, but generally with workman's comp, when they issue workman's comp policy, they try to estimate what your total gross payroll will be for the entire year. And then at the end of your policy period, you're going to go under an audit. It's not like if you're going to get taxed extra. They're just taxed and they're just checking the wages to make sure the actual wages paid for that policy period matches the estimate. And overtime, tips, things like that, stipends, all those things, bonuses are all used as a way to determine how your rate is configured, how that wage is configured in your workman's comp. If they didn't estimate enough, typically you have to pay the extra. If they estimated too much, sometimes you get a refund. So that's why you also need a payroll software as well to make those differences, because the auditing companies will need your payroll ledger, but they'll also need all your 941s or all your unemployment forms to verify and compile and audit your payroll.
I can see why we need software. I would never remember all this and get it right.
Oh yeah, my payroll clients, I won't take a payroll client on unless we put it through a software. Only because the compliance, if you don't comply with submitting taxes on time for your employees or filing the paperwork on time, there are massive penalties and interest. And the IRS and the state, they're actually worse than income tax penalties and interest, and they don't mess around with that.
So put the money in the software and just do it right.
Whether it be you use someone like myself to do it, or you use a different type of software on Try Your Own, make sure it will submit and withdraw the payroll taxes and submit forms for you automatically to help keep you out of that hot water.
Okay. Now, I want to stop real quick and say that to our members that we respect Greg. We trust Greg. We've known him a while, and he does our books, full disclosure. So we would encourage you to talk to Greg. He's at a lot of our conventions and speaks to members and other attendees. So you're welcome to give Greg a call. We'll put his information up so you can get a hold of him. But I'm sure some of our members would like to know what you might recommend for software also.
Yeah, so our two pieces of software that we use. So generally, we use, for processing our own client software, we use Gusto or we use Patriot Payroll, primarily Patriot, but we also use Gusto. We use both of those platforms.
Okay.
That's what we use as our processing software. Obviously, costs differ because we provide more hands-on service to avoid 800 number. A whole different discussion. But you can use Gusto, Patriot. There's other things like Sure Payroll, QuickBooks Payroll, ADP, Paychecks, those type of things. I would definitely suggest do your due diligence. Make sure you feel comfortable with the software and the vendor you're going to use, because a lot of times you can get a salesperson, they're going to try to just get you in there. And yeah, you want them to look at all the bells and whistles and make sure it meets your needs. But I think the most important thing at the end of the day is the support. What type of support you're going to get, because I get your AFC homeowners, you may not know the payroll rules, right? I know the payroll rules, and I give all the AFC homeowners credit. They know how they do what they do, right? We each have our own lanes we specialize in. But make sure you feel comfortable and you get that support for things you don't know to help you through it.
And you do specialize in AFC bookkeeping and finances and taxes, so you're up on all that too.
Yeah, and support also, do you have to call 800 number to get support? Or like us, you contact us and you get us directly and we help you through it. It just kind of depends on what level you want there too.
That's excellent.
Let me stick another part on there. I'm not a bookkeeper. Nadine can handle this, but I'm new to it. So do any of these programs work with QuickBooks? Are they plugins? Are they standalones?
Yeah, so all the programs I mentioned do integrate with QuickBooks. Right, and I use primarily QuickBooks. There are other types of accounting software out there, but the primary one everyone uses is QuickBooks. That's the primary software. That's what we use for our clients is QuickBooks. But all the software I mentioned do integrate with QuickBooks by way of, meaning you run the payroll and it pushes the entry directly into QuickBooks for you.
I would think a lot of people do. That's a common one, right?
Yeah.
Okay.
Yeah, yeah.
Yeah.
Well, because you're an expert in accounting, I would like to get Greg's opinion on what it is that you wish every AFC owner knew to help, not you, if they were to use your organization for accounting, but help themselves from the penalties and interest, the disorganization and the confusion that can go along with taxes and accounting.
I would say the number one rules I tell all clients, or I don't even care what business you're in, whether you're a restaurant, ASC homeowner, or a cleaning company, it doesn't matter to me. If you don't have accounting records straight or you don't have those apart, it's going to be very difficult to help complete your tax return. But not only that, it's going to become difficult for us to find tax savings for you. All right. Okay. I always say the tax return is the tail end of the whole thing, because the tax return is a reconciliation of your income for the entire year. However, how do we reconcile it? Well, we have to do books. How do we know what you made? You have to do your financial statements. You have to do books. If you don't do those regularly, I can't help you December 20th and say you should buy new equipment if you haven't even done your books. I don't know if you had a loss or if you have a profit. I don't know. So I would say the most important rule that I always tell clients, you are all concerned about paying less taxes. Me as a tax person, I don't like paying taxes either. I will admit it. No one does. But if we don't have those books in order, it's going to be very difficult for me to get those answers to you.
So when you say record straight, you're meaning your books are in order, that they're reconciled. What else?
Yeah, your books are reconciled, all your transactions are posted, your profit and loss statement, your balance sheet, both of those financials, they're all clean, they're good to go, that type of thing.
So for those that didn't listen to the previous segment on the software and those types of things, then they'll definitely want to listen to that to get some help on how to organize and keep the records straight to make everyone's job easier.
Correct, yeah, and like I'm saying, you don't have to use an accountant. Obviously, we offer the service. If you want to do it on yourself, that's fine, no problem. Just make sure you get your books done, and don't wait till you need a year to do it, because honestly, it's just like cleaning your house. I don't like cleaning my house, right? I tend to delay it, but when I do, it's nice to do, but I also regret it if I wait last minute to do it, right? It should be something you should do more regular on an ongoing basis.
Have you ever had someone that brings in a shoebox with all their receipts and that? How does that relate to keeping records straight?
If you're bringing receipts in if you just bring a shoebox in with just receipts and nothing else, they're not going to be your best friend right away. I'm just saying that now. I mean, we can still help you out. I'm just saying that takes us time to do the work, right? But in a serious note, though, if you bring all your stuff in a box and haven't even organized any of it during the year, how do you know if you're making income, right? How do you know if you have a loss? How do you know if you're going to have a profit? You have a profit, you're going to pay taxes if you're a for-profit business, right? And how do we know what estimates we need to create for you? How do we know can you afford this equipment? But more importantly, too, if you're not keeping those records straight or more regularly, even if you do it on a spreadsheet or a piece of paper, that's still technically record keeping in a way, right? If you even do it that way, you can still kind of figure out where your bank account is, where you see at the end of the year to say, can I hire people in? Can I buy this new piece of equipment? I get asked for other clients, can I buy a van for my residents? I get asked that question. If I don't have that data, I can't answer that question for you. So I would definitely say you bring those receipts in at the end of the year, probably not going to help give too much insight for you. You need to, even if you do the receipts monthly on your own, that's going to give us more insight to help you out.
Yeah, so in the hierarchy of things, software is always best.
Right.
If you're just tracking receipts, then at least have some type of ledger showing what category they fall in.
Right. And even some very, very small company that just started out from the very beginning. Like I have some clients who are still starting out. They haven't really brought a lot of business in. They're still in formation and they can't afford software yet. I say, no problem. Just put it in a spreadsheet for now. A tab that says your income, a tab by category expense. We'll do a pivot table. We'll run it that way for now until you build up and we get you software.
Thank you. That's important.
That's the category I begin. Just keep it simple.
Yeah, because in an IRS audit, if you're ever audited, they're going to want to see those records. They want to see what they are. So,
So as we talk about tax strategies, very often, especially for individuals looking to start a new AFC or maybe open different ones and structure it differently, the common question that comes up is, should I stay a profit or should I be a profit organization or should I look at being a nonprofit organization? So I'm curious to get your expertise on what are the differences and what are some of the things that the owner needs to think through to make the right choice for them.
Okay, yeah, good question there. Both entities, obviously, regardless of what entity you use, your motive is to obviously to care for your residents. That's why you're going into this. You want to care for others and be there for others. That's the best thing about doing it, right? However, the underlying aspect of how you run the business can make, not necessarily run, how you run it can make the difference, all right?
Okay.
Let's just start with a for-profit a second here. The aspect of for-profit is it's quick and easy to form for the most part. You still may need to get potential legal counsel, especially around liability issues. But for the most part, you could say, I'm going to form a for-profit AFC home today. You essentially created a for-profit entity. With a for-profit entity, as you make money, you have to pay taxes on that. Yes, you're still caring for people, but at the end of the day, you still might have a net income or net loss as a result of caring for the people. That's a for-profit. From a nonprofit standpoint, yes, you still need a bottom line. You still need to make that, because if you don't have your bottom line, your cash isn't there for future bills. But your motive, instead of a profit motive, really becomes more of a mission focus in that respects. So yeah, there is no tax liability in that respect. You don't have to worry about figuring out how to reduce our tax liability. You can more focus on caring for the resident. That's probably, I would say, the nonprofit idea around that. Now, the nonprofit, though, that is more complicated to form, meaning that you are open for public inspection. So the public can look at your public tax return, because the nonprofit does need to file a tax return. All right, it's informational return, we call it. You have to have a board. The board owns the organization. You don't. You could be the executive director, but you're not the owner. Whereas a for-profit, you are the direct owner and make the sole decisions. Or a board could make that sole decision instead. You also have to write bylaws. You have to get approved by the IRS and state. So there's more involved in the nonprofit space.
Okay.
Also, from the nonprofit, if you want to raise funds, you can apply for grants or donations. For-profits, you can't do that. Nonprofits, you can, but you also have compliance requirements around that. You're complying with the grant requirements and stuff like that.
Interesting. So because it's so complex, then in addition to an accountant, a lawyer would be an appropriate person to help form that nonprofit?
I would say a lawyer would be, because you need to create bylaws. Because one thing, when you create a nonprofit, you have to file a form with the IRS requesting the nonprofit status. Yes, you can register as a nonprofit at the state and get EIN numbers as a nonprofit, but the IRS also has to grant you the nonprofit status. And one thing needed is bylaws, and attorneys are the ones who help draft the bylaws.
Interesting. So lot of things to consider. So if someone is on that cusp of still not knowing which way to go, then you would be the first point of contact to process that?
I would say, yeah, if you're kind of on a cusp, which way you want to go, for-profit or nonprofit, talk to an accountant and or lawyer, both, to say, hey, here's the requirements of both, and see what's best for you. I have clients who prefer the for-profit route. That's just what they prefer. No problem. Some that I know just gone through, and one currently that I know of who's going through the nonprofit formation route, and they're doing a great job with it. That's what their goal is. That's what they want to focus on. So it just depends on what you want to do, how you want to organize your organization, as long as you know those differences.
Wonderful.
A lot of people that are considering nonprofit look at the ability to raise money,
Right.
rather than just rely strictly on what the resident can pay.
The funding, yes.
Would you say that that's a primary consideration of nonprofit for people?
I say that could be a primary consideration for people, because you are correct that at a nonprofit you have the ability to bring in grants and scholarships that aren't, not scholarships, I'm sorry, donations, grants and donations that aren't taxable. All right. Now, I won't get into the taxability aspect of that, but let's just say non-taxable for this ease right now. They're non-taxable. They can bring those in and use them for other things. For profits, if you get a grant, you have to pay taxes on that grant. So things you have to consider. But like I said, if you get a grant, you have to usually apply for them. You have to hope you get awarded. And some organizations who issue a grant, they may require end-of-year grant reporting or very specific requirements that you must use the grant on. If a donor gives you money for a new kitchen, you must use that money only specifically for the new kitchen. You can't use it for anything else. Same with the grants. Some might be very specific. So there are some compliance things you have to consider with that.
Well, thank you for all your expertise. You've really shed some light on some really confusing topics that can really make you worry. So
Yeah, no
appreciate
problem.
your time.
Yeah, like I said, it's like you all do a great job running your AFC homes. That's what you love to do. I love accounting. We all have our great things we're good at.
Right.
And I definitely say lean on the different people who know what they're doing. So that way it doesn't get yourself in trouble. I can't change the oil in my car for the life of me, so I go to a mechanic for that. It's kind of the same thing.
Yeah, good
So,
advice.
yeah.
Thank you.
That's a good example. Otherwise, your car doesn't run.
Yeah, I put window fluid in my brake fluid one time without knowing it. So that's just how much I know about cars. So, you know.
Yep.
So,
Awesome. Way
all
to
right.
go.
Cool. Thank you.
Thank you.
Yeah, no problem.
All right, so great discussion, and of course, our members can follow up with discussion online in the communities. We cover a lot of topics here, and every one of those topics can be something you share with your fellow members or learn from your fellow members. It goes both ways in the community. So thanks for watching, and we'll see you again in another month with more topics. Thank you, Greg, for being here to help us understand the taxes and accounting business a little better. Our hope here at Care Providers is that you each, as owners or managers of an AFC, realize that you are amazing people. To care for other people, it's a tough job, and there's so much to it. It's not just what some people think when they get into it. It's not as simple as just caring about people. It's knowing how to run a business and knowing how to operate well. And that's where Nadine comes in and our other coaches to help you learn how to run your AFC better with less stress and be successful. We hope that you constantly rekindle the passion that you started out with to care for your residents well and to care for your caregivers in your organization, because they are the backbone of your business. So please don't let stress or confusion rob you of that passion when there's help available. So let us know if we can help you at all and support you. Thanks for watching. See you next time.